The listing of stocks on various exchanges to some extent contributes to the growth of the economy within which they operate, as the movement in share prices as well as stock indices in general serves as an indicator that helps to determine the general trend in an economy. Welcome to another edition of the Nigerian Investor. Last week, we talked about the state of IPOs in the Nigerian capital market, and we shed some light on the Vediva DV Fund initial public offer, which is currently on, as it is expected to close on the 26th of May 2014. Today, we want to discuss the Caverton listing on the Nigerian Stock Exchange. The Nigerian Stock Exchange, which remains the gateway to African markets on the 28th of May 2014, witnessed a new listing in the oil and gas sector of the bourse. On meeting all regulatory requirements, Caverton Offshore Support Group PLC got listed by introduction on the main board and the exchange at N9.50 per share with about 3.35 billion outstanding shares. The listing of Caverton has brought the total number of new listings on NSE in 2014 to 3. Earlier listings witnessed in the year are Seplat and the Vediva Griffin 30 ETF. Caverton first came into the Nigerian capital market in 2008 via private placement, sold at 8 naira per share. This implies that shareholders who joined the firm via the placement already have N1.50 or 18.75% gain recorded to their kitty. The listing of Caverton in the oil and gas sector amounts to the firm contributing about 8.96% to the total market cap, with the stock emerging as the 5th most capitalized stock in the sector. A closer look at the performance of companies listed from 2008 to date shows that 6 out of the 45 stocks posted positive returns. Danksem recorded the highest return of 65.19% from its period of listing, while McNichols followed closely with 36.73%. Seplat, which is the latest listing on the exchange, recorded 13.27% gain. On the other hand, 37 firms posted negative returns, with Starcoms leading with 96.51% loss and closely followed by Dacom with 90.48% loss. However, 2 firms, Austin Lars and CWG, remain flat as they both currently trade at their listing prices. Recent analysis on the 2013 audited results revealed that some quoted firms are yet to file their financial statement despite the 1-month grace period granted to all quoted firms by the exchange. 91 firms are yet to file their latest audited result out of the 195 listed companies on the Nigerian Stock Exchange. This figure represents 47.94% of the total firms listed. Prominent among them are Ohando and Conhoil PLC. The following companies are expected to hold their AGM soon: Caverton Offshore Support Group PLC on the 5th of June 2014, Colvey Business Solution PLC on the 27th of May 2014, and Mobi Oil PLC on the 28th of May 2014. On announcements in the market, Unity Bank PLC is ready to open its right offer during the week and will continue for the next 28 days. The bank plans to raise 19.22 billion through a right issue of 38.547 billion ordinary shares of 50 kobo each to existing shareholders at the price of 50 kobo each. The rights have been pre-allotted to shareholders on the register of the bank as at December 16, 2013, on the basis of 1 new share for 1 share held as at the closure date. The bank private placement will open by the 3rd week of May 2014 with 40 billion ordinary shares of 50 kobo each at 50 kobo each to bring additional 20 billion in new equity funds. Also, Mayor Baker Nigeria last week announced plan to raise 3 billion naira through right issue and special placement to shore up its working capital. Mr. Nnamdi Okafor, its managing director, said that the recapitalization will help the company to increase its operational capital and strengthen its global competitiveness as well as ability to deliver value to shareholders. He said the company had, in the last 3 years, embarked on capital investment with the aim of meeting financial needs of the company. The managing director said the capitalization details were undergoing the scrutiny of the company's board. On share support segment, based on the nature of complaints we continue to get on the share support service portal, we discover a lot of investors are yet to embrace the e-dividend platform in order to ease the payment of their dividend. Should you fall in that category of investors, kindly forward a mail to sss@proshareng.com for professional guidance. On the watchdog segment, the CBN Monetary Policy Committee at its just concluded meeting lay emphasis on the fact that loose financial spending in the run-up to the 2015 election posed a major risk to monetary policy objectives, And as such, the following decision was taken at the end of the meeting. 1. Hold MPR at 12%. 2. Keep the CRR on public sector deposit at 75% and CRR on private sector deposit at 15%. And lastly, retain the MPR corridor at plus or minus 200 basis points. Thank you for joining us on this edition of the program. Until we come your way again next week, I remain your regular anchor.